In this presentation, we will take a look at multiple choice questions related to financial statement analysis, going through those questions and then practicing test-taking skills with them. First question, financial statements that have information for two or more accounting periods are either A, double statements, B, multi-period statements, C, successive statements, D, comparative statements, or E, too many numbers statements. Okay, let's go through this again using the process of elimination. Financial statements that have information for two or more accounting periods are either A, double statements. Now, that could be a term that we could apply to it, but it seems a little awkward of a term, not the easiest thing to say. I don't recognize it, so I don't think that's going to be it. B says multi-period statements. And again, that could be a term that it seems reasonable, but it still seems a little awkward. I don't recognize it. I'll keep it for now, though. C says successive statements. Again, it seems to indicate kind of what we're talking about, but I don't recognize that term. And again, it doesn't sound like it's something that would be used. It sounds like a funny term to me to use. Doesn't sound like an easy term. D says comparative statements. And that two or more periods, you would think that comparing, that sounds kind of reasonable. So, and then E says too many numbers statements, which seems like kind of ridiculous of an answer for this type of question. So I don't think that's going to be it. Let's go through it again. Financial statements that have information for two or more accounting periods are either B, multi-period statements, or D, comparative statements. Of those two, the one that sounds more familiar to me and hopefully to you is the comparative statements. So the multi-period statements, that seems like a reasonable type of term, but not one we typically use, and therefore D is going to be our final answer. Financial statements that have information for two or more accounting periods are D, comparative statements. Next question. Horizontal analysis, either A, evaluates changes across time, or B, is the same as vertical analysis, or C, is the presentation of common financial ratios, D, evaluates financial statements to industry statistics, E, evaluates financial data across all industries. Let's go through this again using the process of elimination. Horizontal analysis, either A, evaluates changes across time. That seems somewhat reasonable because you would think we would line up the financial statements and evaluate them horizontally across time. So we'll keep that for now, and we'll say B says is the same as vertical analysis. Now I recognize those two terms, and hopefully you do as well, and they seem different. Horizontal analysis and vertical analysis doesn't seem like the same thing, so I don't think it's going to be B. And then C is the presentation of common financial ratios. Now we do have ratios in the horizontal analysis, so maybe I'll keep C for now. D says evaluates financial statements to industry statistics. The horizontal analysis, possibly I'll keep it for now. And E says evaluates financial data across all industries. And again, I don't really think that's going to be the case. All industries, the financial statement across all industries. Not even just the one we're in, doesn't seem like it. So I'll cross that one out. We'll keep A, C, and D for now. Let's go through it again. Horizontal analysis is either A, evaluates changes across time, C, is the presentation of common financial ratios, or D, evaluates financial statements to industry statistics. Now C is the presentation of common financial ratios. That's usually not a horizontal, that would be a ratio analysis. So it's not going to be C, because that would be picking and choosing certain ratios. D says evaluates financial statements to industry statistics. Now, it's possible that that could be it, but that's typically, again, not what we're talking about usually with horizontal, because we're talking about A, usually. So A being our final answer, evaluates changes across time, meaning in the same company, we have different periods of the financial statements. We'll be evaluating those different periods basically across time, comparing and contrasting them in a horizontal framework, putting one after the other, and then the comparison between the two. Final answer, horizontal analysis, A, evaluates changes across time.